All right, in this video today, I want to share with you, from my opinion, I'm sure a lot of people will agree with what I'm trying to say, but I'm not trying to, I want to say this first and foremost, knock or say any bad or negative thing about any particular prop firm organization out there. I just believe that in time, especially if you have the capital to be able to do so, you should personally fund your own trading account, whether it be small or large. If you're starting with a small amounts of capital, you can definitely grow it. I've talked about that in many videos, especially one that I did recently, not too long ago, showing you in a title, basically explaining how you can grow and take $500 and turn it into $5,000. Now, what I'll do is I'll leave a copy or a link to that video down in the description portion of the video, and I'll also include it as one of the end cap videos at the end of this video, so you can click on in the description or click on the direct video. So watch that video because it's very informative, provides lots of information. It's all surrounding what I like to talk about as the 5% rule. That means not risking more than 5% of the capital or your account size each time you enter a trade in the market. All right, that's going to help you preserve your money, and it's going to help you stay in the game longer. Okay, now when it comes to prop firm companies out there, and they all have their different sets of rules that most traders have to adhere to. But one of the biggest things that I tell people is, if you choose to use a prop firm in starting off, and maybe you don't have the capital, or maybe you're a beginner trader, because I will say this, I believe that probably one of the bigger perks that and reasons why people turn to prop firms is that they're beginning, they don't have the capital, or they just want to get the training, meaning they've learned a particular strategy, they've learned how to, master market structure and understand price action, and they want to be able to test things out before moving forward with their own capital. Because I do tell people, if you're able to pass the evaluation or challenge and, get funded, and maybe you have a PA account, they call them, and then you're able to start taking payouts, withdrawals, then start taking, a big chunk of that, a percent of that, and start saving it or pushing it over into a brokerage account, okay, and start putting your capital there. If you want to trade both, having a personal and a funded account with a prop firm, that's a good thing as well. But I think that you should really start gearing towards the option of having more control of your own money, because in the end of it, I want to say this, that I believe one of the downsides that, and it could be too, it depends on the person. One of the downsides, I believe, is that who wants to give away a certain percent of their, the hard-earned capital that they've built over time, because you're the one that's trading, not the prop firm. They're just giving you a platform to be able to do so with limited amounts of funds. And that's one thing I want to touch on too. But because a lot of people think that when they sign up for these full-on challenges, they're getting that large amount, starting capital of 25 or starting capital of $50,000. No, you're not getting that. That's all, it's not accurate. Okay. I'll talk about that here in a minute. But what I'm trying to get back to, what I'm saying is that when you're trading with most, and some can be higher than others, most will allow you to take home 90% and they keep 10% of it. Some may keep 20% of it. Why give a percent of your profits away? Keep it in your own pocket. So that's why I believe if you're going that route of wanting to start with the prop firm just to kind of get your feet wet, to see if you understand and know how, and to see how much you know about trading, at some point start moving that money over. Don't spend the withdrawals. I would take them and put it into a brokerage account. Okay, and again, you can trade both if you choose to. All right. Now, again, that's something negative that I believe that, or dislike that I have about the prop firms, is that they don't allow you to keep, a chunk of, or 100% of what your hard-earned money that you work for. Okay. I mean, again, you're already paying money into an evaluation, and that's the thing they want to do, is keep the wheels moving. Because even though they may be making a percent off of what you're earning or making, their biggest thing is they want to more likely see you fail time and time again, okay? Because that's where a chunk of their revenue stream is coming from. Majority of it is from you failing the evaluations or challenges and having to start over and over and over and over. I believe if you most of you probably have done the research or have heard tons of people online saying that it's exhausting because, and not just that, you're spending wheels and money and paying into these challenges. Now, I guess a lot of people probably have done the numbers and saying, well, it's still cheaper to go the route of the prop firms, for each their own. It just depends on the person. How well do you really, know how to trade? Because if you know how to trade the correct way and you know how to practice proper risk and trade management, then you should be able to become profitable and be consistently profitable on a daily basis, okay? To make money to where you take home 100% of your profits and no one else keeps a percent. And hopefully that makes sense. Now, what I want to say is this. Let's say you're someone that's interested in signing up for like a $25,000 or a $50,000 account with one of these prop organizations out there. Are you able to, is that the kind of capital that you get starting off? No, there are limitations, definitely. You only get a percent of that amount, okay, in all honesty. So like a $25,000 account, you're only able to get like a percent of only of $1,500 to be able to trade with, all right? And most of them have what's called like a trailing threshold, all right? So they have rules in place because, and I don't know the ins and outs of every particular program out there or prop firm out there, but again, their aim is to see you fail by putting those rules in place because they want to see more people fail than succeed, all right? So you're only getting $1,500 to actually trade with. And if you go below that $1,500, then that's it, okay? And that can be tough to do depending on, what type of strategy you're using, what markets are you actually trading. And I want to stop right now and tell people, anyone out there watching this, whether you're trading with your own capital or you're trading with the prop firm, just starting off, trade the micro futures, okay? And then build up your account, especially if you have a small trading account. Trading with your own money, again, trade with the micro futures is a better way. Yes, it's going to take time and more time to compound because that's what trading is about, is compounding your account to get to a certain level. But that's why I said at the beginning of this video about the video, how to grow and take $500 into $5,000 and turn it into $5,000. I talk about that in a video, just using that 5% rule. You can do it within a matter of just 90 days. Watch that capital grow to $5,000 with a small amount invested of only $500 of your capital, not turning into a prop firm. All right, and them only starting you off with $1,500 and having those rules put in place. And if you go below a certain percent on a daily, I think it's like 30%, some of these, maybe 40, whatever the case is, then they automatically stop your trades out. All right. I believe that's the way they do it. But again, a lot of them have these trailing thresholds, and it all is dependent on, how quickly the game is going to be over for you, depending on the number of contracts you're actually trading. Okay. But again, trade with the micros. I don't know the ins and outs, like I said, but I'm just telling you that the size of capital that you're receiving when you purchase these challenges is not 25,000. It's not 50,000. It's not 100,000. You're only getting a small percent that you can actually, trade with in a sense. All right. And once you go below that amount, the challenge is over with. You got to reset and start all over again, and things start to snowball and get expensive over time. All right. Now, I just want to say that again, them keeping a big percent of your money, well, not say big percent because it's 10%, but it could be more. But who wants to give away even 5% of their money? No one does. I mean, in time, you're going to start to see, even if you think this is a good idea to go with a prop firm, you're going to see that I could keep that 5%. I can keep that 10% in your own pocket. Another thing as well, I want to say is that a lot of them have a time frame in which you can take withdrawals. Okay. When it comes to your own trading account, all right, small accounts, large size accounts, doesn't matter. You're in control of that. It's your account. It's your money. Okay. There's no limitation to, how much or when you can actually withdraw from your account. With the prop firms, they do. Okay. And there's a reason why. I mean, they have certain cycles of that they go through. Probably a lot of them when it comes to actual funding or money sitting into accounts that they can actually pay out. I've heard situations in the past to where the money wasn't there and they weren't able to pay out. But, a certain limitation of individuals up to a certain number, probably within that week. Okay. And it could be on a monthly basis. Some I've heard companies weren't even able to pay out. And some people, here it is, they built up an account, they passed a challenge, they're ready for the withdrawal and never seen a withdrawal because the funding wasn't there. All right. So you just really need to be very particular about and do your research on, if you choose the prop firms, which way to actually go, and make sure that you're understanding all the rules that they have, because they're going to lay them out for you, and you need to read that fine print. That's the thing, to make sure that if you're doing these challenges, that you're staying within their limitations of rules and following them, so that you can pass them the evaluations. Because it's not fair, and it can be kind of heartbreaking if you pay that money. And I know some of them, it could be more expensive than others depending on which prop firm you go with. But what I'm trying to say is no one wants to spend money and then find out in the end is that, oh, I'm used to trading this particular way surrounding my own trading plan, but now I got to adhere to these additional sets of rules through these prop firms, and that doesn't kind of jive. So that's the thing about having your own account, is that there's no rules there other than the rules that you put in place in your own trading plan. So hopefully that makes sense. Okay, so I just want to share that with people today, and just let you know the better option in my in my opinion is to really learn how to trade, and you can do that in demo and simulation. You don't need to go and start with a prop firm, okay? And do it on your own, and then and while you're doing that, save money, put it to the side. Not money that you need to pay bills with, but money that you can put to the side to use when you're ready to open up or start your own brokerage account. All right, that way you can trade with your own funds, and stick with the trading plan you have for yourself. Okay, but I'm not here to persuade anybody any particular way. I'm just telling you my opinion and the reason why I believe that trading with your own funds is the better option. And again, if you are simply using a prop firm and you are really taking withdrawals, listen, open up a brokerage account of your own. Okay, all right, preserve your capital. Think about, if you're someone that's taking, let's say, I don't know, $10,000 a month, right? And they're keeping $1,000 of that, 10% of that. That's $1,000 that you could keep to yourself, and having your own brokerage account and be able to use that money as leverage in your own account, and can grow your account even more quicker. Why are you going to take a percent of your money and throw it out the door to give to someone else when you can keep that money in your account? $20,000, $2,000 they're keeping, okay? $50,000, $5,000 they're keeping, depending on how much you're making on a monthly basis, and what your withdrawals are. They're going to keep 10% of that, and I believe that you should be keeping that yourself and not giving it or throwing it out the door to another company. But again, that's just my take on it, my spin on it. So, but again, I'll leave that video down in the description portion of the video. It'll be at the end of this video as well, about how to grow and take $500 and turn into, $500 and turn into $5,000, just simply using the 5% rule. Watch that video. It's very informative, and it shows you how you can do this. But you need to learn how to trade the correct way. I appreciate everyone that watches the video content on a daily basis. For all those that are using the strategy, that are part of the Discord community, that are video watchers, that watch the content here on the channel, I'm sure you're learning things. For all those that are elite or the ultra elite supporters of the channel, thank you for supporting my efforts as not only the trader but as a content creator. And if you're interested in becoming part of that private community, I want to say this right now: what you receive are all the trade breakdown information surrounding the strategy and how I trade, which is very simple. It's all using multi-chart confluence, basically using a top-down analysis, using a higher base chart, and then scaling down to a lower base chart to look for entry points, all surrounding supply and demand. Okay, it's very simple. If you choose to become an elite member, both tiers, the elite and the ultra elite, the link is down in the description portion of the video. I'll touch on that in a minute. But what you receive if you become an elite member are all the trade breakdown videos. Those are trades that I post over on our Discord community, and the Discord is free. I'll go back and I'll break them down for anyone out there who's interested in becoming an elite member, so that you grasp a full detailed understanding of why I took that trade, surrounding structure, price action, where to place your stop loss, where to place your profit targets, and surrounding these setups that I take. So you can look for these same similar type setups when you're back testing and forward testing the strategy for yourself. Plus, you get the video playlist, which is a series of link by link videos that are content that I feel is really important surrounding the strategy. Okay, and you also receive the market structure video for anyone, and it's very detailed for anyone that is struggling with that concept. That's all you receive. All that if you become a elite member. It's only $6.99 a month. I'm going to put that out there right now. It's very inexpensive. Now, if you choose to become an ultra elite member, you receive everything I just talked about plus the live recorded trading sessions, which are there's plenty of video content to watch there, where I'm recording my trading sessions. You can see me engage in trades. I talk about the trades, why I took them. So again, so you can understand why I took those trades. All right. Me providing that video content and breaking it down, I feel is the best way of education for people, is because you can go back and rewatch the videos. You can go back and rewatch the videos at any given time and take, notes on your own. All right. You don't need to be right in front of somebody. You could go back and learn this on your own. All right. So if you choose to become an Ultra Elite member, that is $14.99 a month. Again, that's only pennies on the dollar a day. The link is down in the description portion of the video. It's titled Ultra Elite Supporter. Once you click on that, give it a couple seconds, a few tiers will pop up. Choose either the Elite or the Ultra Elite, depending on, the perks and rewards that you want to receive. Choose that, click on the tier you want, and then go from there. All right. But outside of that, if you're not a current subscriber to the channel, please take the time to sub by clicking the button down below. Make sure to turn your post notifications on by clicking the bell. And as soon as you do so, please also make sure to drop a like on the video if you found it to be very informative, if it provided you some insight, if it gave you some food for thought and thinking that, you know what, I think I'm going to go ahead. I am already profitable trading with the prop firms. If you're doing that, I'm going to start pushing money over into my own small or live trading account. Okay. Or you say, I'm going to start off, once I learn how to trade, I'm going to move right forward and starting off my own personal trading account. All right. Versus turning to a prop firm. But either way, you have to make that choice for yourself personally. I know a lot of people that they love the idea of turning to the prop firms first, because they feel as if, they give these big discounts. I can buy an evaluation for $30, $50, $40, $50, see how it goes. But the thing is that they get you in that vicious psychological cycle of, if you fail, then you got to go back and pay that amount again and again and again. And it starts to add up. Okay. And at the end of the day, there have been plenty of people out there who probably spent thousands of dollars trying to pass those evaluations. Okay. But that's all I have, guys. I appreciate you tuning in and watching today's video. Take care. I'll see everyone in the next one.